As the House and the Senate reconcile tax reform, and uncertainty hangs over us in the housing market as well. To help us figure this all out is Brandon Haefele with Catalyst Mortgage. Thank you so much for being with us this morning. Let's first start with the local scene and the Sacramento housing picture. As we're starting to see Sacramento housing prices go up, but then the number of inventory starting to shrink.
Yeah, you know, really this last year we've seen a steady increase, 9.3% year over year. So the median home price in Sacramento County is now $350,000. Whereas on top of that, you've seen sales slow. You know, we're down about 4%. So it's kind of one of those things. The housing market is slowing down. We're kind of cooling off from that, rocket high that we had. But at the same time, we're seeing a stabilization. We're not seeing things drop. We're not seeing where reverse effect happen, where home prices are actually going down. We're really just kind of like leveling off, and we're going to start seeing it be steady.
Okay, so who's the winners and the losers here? Is this a good time to buy or not, or should people wait?
Well, I think it depends on your situation. For instance, if you're going to be moving in 4 or 5 years, it might not be. If you're looking to, the home price might not go up as much as you want, or if the market, does kind of, flatline for a little bit, you might have that problem. But if a long-term investment, if you plan on staying in the area, it's definitely still a great time.
All right, let's talk about tax reform and the Senate's proposed plan and how this could affect people who own homes and people who are looking to buy homes as well.
Absolutely. With mortgage interest potentially being on the table to either have limits or to pull it off, meaning the deduction, that could definitely impact, future homeowners and existing homeowners. Realistically, we'll probably see some type of a cap on it, maybe $1 million or more cap in interest that's written off, or for the purchase price of the home. But really, it'll more or less affect, if everything goes through, property taxes. If you pay $10,000 or more per year, you might have some limits on what you can write off.
Oh, no. That could be a problem for a lot of people, especially in areas, especially in areas where the home prices are a little bit higher. Okay, let's talk about the Federal Reserve and the potential of them raising taxes again. And we've been anticipating this, but how will that affect the housing market, especially here?
I always try to remind consumers, Federal Reserve is not directly tied to mortgage rates. So although we see interest rates, with the Federal Reserve increase, you're not going to see a direct correlation. You'll see it more on your credit cards, home equity lines of credit, and so on. It'll be more staggered pace, but interest rates over time will go up.
So can we still get those really low, awesome interest rates in the 3s, 4s?
Yes, you still have interest rates in the high 3s, low 4s available, but it's important right now, if you have high interest credit card debt or things that you're looking to do around the house, utilize the equity in your home, pull some cash out, pay off some credit card debt, and consolidate and save some money.
I'll give you a call and refinance.
Absolutely.
We've painted kind of a grim picture, though, here, so give me something positive.
When we say grim, the market is slowing down, but that doesn't mean a negative. That just means that we finally hit the point where pricing should be at, and really we're going to start seeing steady improvement over time. But it's important to know that even with these changes, what's going on, the market is still doing good.
All right, sounds good. Thank you, Brandon Haefele with Catalyst Mortgage, for being with us this morning. All right, Mortage.